Good morning, Sawadika. Thank you all for joining us today as we discuss our Q1 performance for fiscal year 2020-21. Here is a brief snapshot. This was a very good quarter for us, one of the best in the last 5 to 6 years. Our volume increased by 23%, primarily due to Indonesia operations ramping up. Our profitability measured by our EBITDA saw a significant quarter-on-quarter and year-on-year increase of 42% and 37% respectively. Our EBITDA margin also saw a significant increase, landing at about 29% this quarter. Compared to our EBITDA and volume growth, our net sales saw 5% increase year-on-year due to the drop in selling prices owing to the sharp decline in raw material prices. And of course, due to the impact of consolidation of our overseas operations and exports and the appreciating Thai baht. As you can see, we have a well-diversified sales portfolio across the regions. We're fairly evenly spread across our key regions. This growth is made possible through our efforts of our proven management team, our global leadership position, steady demand growth in our industry, our own strong track record, and of course, the stable earnings across business cycles that we have been able to generate. To delve a little deeper into our leadership position, we are the global leader and preferred strategic partner in flexible packaging, which is the largest, fastest growing segment in polyester film, with many globalized multi-location customers who prefer globalized multi-location strategic partners like Polyplex. The group was started in India over 30 years ago, and Thailand was the first international expansion for the group. Polyplex Thailand quickly became the flagship company of the group. It was listed on the SEC in 2004 and is the parent company of all the subsequent international expansions for the group. With our newest edition in Indonesia, we rank at number 5 in terms of production capacity in the world. And when we drill down to regional markets, we are market leaders in both Southeast Asia and Europe when it comes to thin film. As you can see, our sales are spread out quite evenly around the world and our entities, thereby reducing our dependence on any sole entity and reducing our risk. We are well diversified in our product portfolio, where while our core business is of course thin PET film, we have been constantly investing in and increasing our portfolios of other films as well. With the Indonesia line coming online, we are seeing a significant increase in the share of thin film within our portfolio. We are the most integrated PET film producer globally. We are back integrated in resin, which is our raw material, and which allows us to have a wider breadth of product customizations and, of course, improved product quality and film consistency. We're also forward integrated into coated or value-added films at each and every location. With such a spread of assets, we have a balanced portfolio globally with standard and specialty films, which contribute to our top line and to our bottom line, respectively. With our BOPP line coming online soon, we will also be side stream integrating into olefinic films. Our lines have never been shut due to lack of orders. Whatever we've been able to produce, we are able to place in the markets. When we compare to the overall industry COF, we outperform at a significant delta above it. Also important to note that the overall industry COF has been improving over the last few years. We perform at 100% above COF through a lot of debottlenecking efforts at each of our locations. We also have a delivery advantage due to our distributed manufacturing locations. We have leading low sea freight and inland freight and import duty, normal as well as anti-dumping and subsidies. So this gives us the cost of delivery advantage. We look at growth in demand. We see that this is one of the few industries with such a growth. It's consumer staples. We see good and steady growth in global demand of about 4 to 6%, led by the increased population and supporting drivers such as increasing consumerism, urbanization, and the continued shift to organized retail and e-commerce. In Asia, this growth rate goes up to about 7 to 10% in some regions. Core flexible packaging applications are as diverse and ever developing, and this provides us a cost advantage and overall low carbon footprint that is yet to be matched. And there is constant innovation which allows the development in this industry. I'm going to ask Mr. Ashutosh Agarwal to take us through our financials.
Thank you so much, Sakhi. So from here on, we'll focus on some key financial numbers. So as you can see this slide, some of the numbers has already been mentioned in slide number 1 in terms of sales volume and net profit. So here it is more detailed. Our net profit is 40% growth year on year. It stood at 820 million baht. Can you move to the next slide, please?
Next slide.
And our EPS is 91 satang, which is also 40% up year on year. Debt to equity is quite low at 0.07. Return on capital employed is at 22% plus 5% up from year on year basis. Sales volume has gone up by 23%, mainly due to Indonesia startup. And return on equity is at 24%, again 5% up year on year. Moving on, oh yes. Moving on, this slide shows 5 years trend of our revenue. Our revenue stood at 11 billion baht in 2016-17, which has gone up to 14 billion baht in 1920. As Khun Sakhi was mentioning, sales revenue is a reflection of raw material prices and also Thai baht exchange rate movement versus dollar and euro. So while on the volume side, we have grown in last 4-5 years, but sales value does not reflect so because raw material has been sharply declined, which is kind of passed through in our model. And Thai baht has been appreciating, which results in a lower Thai baht number for our overseas businesses. In terms of return on equity, return on capital employed, we can see a significant improvement in last 4-5 years from 3% to 22%. This is a reflection of many things. We have been focusing on cost reduction initiatives in all our locations in the last 4-5 years. That has added to the bottom line. We have been focusing on our portfolio change where we have been increasing the high value added sales. That has also added to the bottom line. And also industry dynamics has been in our favor in last 2-3 years. EBITDA also reflects the same thing. EBITDA, which was at 1.5 billion baht in 15-16, was 3 billion baht in 1920, and in Q1 we have been able to achieve EBITDA of 1 billion plus baht. Moving on, our PAT trend is also similar, which is a reflection of a very strong global leadership and portfolio mix of Polyplex Thailand. Due to different geographical presence, our effective tax rate is quite low because we have some tax advantage in our Thailand businesses, our Turkey businesses, and also brought forward tax losses in USA. Our EPS is again reflecting the same trend as PAT. EPS was 37 satang in 15-16, which is at 91 satang in Q1. If we annualize that, it will be 3.64 satang. We can see a sharp increase in EPS. And we have been following our dividend policy, where our policy states that we'll be paying 40% dividend of our consolidated profit, about 40%. And depending upon the market situation, our growth plans, we have been maintaining 30 to 40% threshold. And as one can see, whenever we have kind of paid dividend of 30%, there were some reasons behind it, and mainly growth proposals. Our dividend yield has been quite good, ranging between 3% to 5% in last 4-5 years. This slide talks about our financial health of Polyplex Thailand. In spite of significant capex in last 2 years, if we total up that is more than 3 billion baht, our debt equity is quite low. It is to set 0.07. It's kind of a debt-free scenario. So in summary, Polyplex Thailand is a very financially sound company, and we have been investing in growth options for last couple of years. We have been focusing on high value-added sales, and we are very confident of beating the industry performance going forward as well. Next, let's talk about our value chain, and I would request our Managing Director Kunamit to take on from here. Thank you. Kunamit, you are on mute, looks like.
Good morning, everyone, and thanks, Ashutosh, for a small walkthrough on the financial performance of the company. So I'll take all of you through the value chain that we are a part of and talk about the industry and the outlook. So Polyplex, as all of you know, our core business is polyester film, thin polyester film. And we are a part of polyester value chain, which starts right from the crude oil. If you see the first three columns, they are primarily focused on commodities. These are traded commodities produced for stock. We are on the last end of the value chain, which can be termed as specialty within the value chain, because everything that we manufacture is for customized for the orders. Nothing is produced for the stock. Okay. So talking a bit about our industry first, the industry is broadly classified as packaging and industrial. So packaging is basically, when we say packaging, there are two elements to packaging. One is rigid packaging, which is not a part of Polyplex business. We are into flexible packaging of food products and flexible packaging of non-food products. A few examples are on the screen. Then the next application is industrial. And industrial application is not one application that we can talk about. There are a variety of usage of polyester film. It goes into solar panels, it goes into electrical applications, into electronics, into window films for automobiles, as well as building construction. It goes into LCD, LED televisions. So I can safely say that we as consumers come across polyester film one way or other every day of our life. Polyplex is focused on flexible packaging, as I said, because that's almost 74% of our portfolio. But we have been growing our industrial portfolio over the years. If we go back 7-8 years, our industrial was only probably 5 to 10% of our business. But today it is almost 25%, 26% of our business. Now, flexible packaging brings in the base revenue and the base profitability for the group. On the other hand, industrial films bring in stability to the margins and high value add for the group. Having said that, even within the flexible packaging industry, there are several niche and special applications where Polyplex is present in. As Sakhi mentioned, that we are the most integrated polyester film manufacturer, not only in our core business of polyester film, but also we have expanded side stream into complementary products like CPP, blown, or BOPP. So that helps us as Polyplex to be one-stop shop for several applications. And also it helps us to expand our product portfolio, increasing our sales into high value add segments, into segments which are difficult to qualify. When we talk of industrial films, it takes almost 1 year to 5 years to qualify into different applications. But once you are in for a long haul. And over the years, our contribution, EBITDA contribution from these products, from these high value add products or our presence in specialty segment has been growing, which is demonstrated here in the year-on-year performance as far as EBITDA generated from this high value add segment is concerned. To support this initiative of expanding the product portfolio, getting more entrenched into the special or niche applications or product segments, we have a strong group R&D, which employs more than 15 professionals. And not only in addition to the centralized R&D, we also have R&D professionals based at each of our units to kind of tweak the existing products and meet the customer needs. And given all our efforts and our focus on the specialty and high value add segments, one can see that our margins are clearly and continuously higher than the margins, value additions or margins generated by standard film producers. So just to demonstrate what the difference could be, we have plotted the value additions for Chinese producers, and Polyplex margins have been 20 to 30 cents higher than the Chinese producers for several years. Okay. To talk about the industry, it is important to understand the macroeconomic factors which influence our industry. Talking on how things have evolved on the supplier side, on the customer side, also in terms of the risks that we see in terms of substitutions. As I said, we produce our own resin because we are vertically integrated. So the raw material for us is PTA and MEG, which is produced from byproducts of crude oil. So PTA and MEG, there have been new investments into capacities of PTA and MEG. So we plus Polyplex is able to consolidate the requirements we have for both PTA and MEG globally. Given this, we feel that we are in strong position to negotiate the raw material prices for Polyplex and do better than what other industry players can do. As far as customers are concerned, we have a very widespread customer base. We have more than 2,500 customers over more than 70 countries. One of the key focus or key strategy of Polyplex is to keep expanding the customer base rather than focusing on a few large customers. The target is to supply to many small customers and have a deeper penetration in the market. For this reason, we feel that we have a balanced negotiation capacity as far as our customers are concerned. Coming to substitution risks, I want to touch upon a little bit on plastics, which is also coming in subsequent slides. Now, plastics was a bad word, carried a negative connotation to it, let's say a few years back. Come COVID and the kind of support everyone got for fighting this pandemic using plastics, the perception around plastics is changing, and I can say is already changed. Now people can realize that plastic themselves were never a problem. It was about irresponsible usage and irresponsible disposal of plastics. A lot of efforts are now going into proper sorting, proper collection, proper recycling, and reuse of plastics. Given this, I don't see any threat of substitution over the coming years. Now, entry barriers. The industry has always been lucrative because this is one of the few industries which has been growing at 5 to 7% year on year for the last 20 to 25 years. Having said that, still there are, let's say, non-tariff barriers into the industry. In the sense that people now realize it is not so easy to produce polyester film. People burned their fingers in 2010 when we saw a lot of new entrants into the in the industry, but very few have been successful. It requires a very long learning curve and qualification time with customers, especially in Europe, in US, and other developed economies like Japan, Korea, Taiwan, etc. So entry barriers, though, are moderate, I would say, given the low capital investment, but still the skill and competence required to manufacture polyester film and expand into specialty segments to have a healthy margin, still, I would say the barriers are significantly there. Now, to talk a little bit about competition and how the industry is expected to evolve over the next few years, we are seeing new capacities coming up. This is very natural for the industry. A few years, let's say 4 or 5 years back, the capacity utilization of the industry was around 65. Over the years, this gap has narrowed down because there have been no new capacity additions over the last 5 to 6 years. If we talk about China, there have been no new capacity additions since 2014. So that's almost 6 to 7 years. So now the capacity utilization factors stand at around 82, 83%. And whenever the capacity utilizations are at those levels, within the industry, we say the capacity utilization is already 100%, owing to the shutdowns and the normal maintenance periods and the product mix of different companies. So it's but natural that there'll be investments into the industry to keep pace with the expanding growth. So we see around 500,000 tons of capacity being added in non-China markets and around 500,000 tons of capacity added in China. China is almost 40% of the global demand. So total market is approximately 4 million tons, of which around 1.6 to 1.7 million tons of demand is in China and balance is in non-China global markets. Of 500,000 tons of capacity, which I mentioned, would be added in non-China markets. Around half of that, which is 250,000 tons of capacity, is has already come on stream. With our line starting up, another line in Indonesia starting up, one line in Thailand starting up, and 2 lines in Europe starting up. So one can say that almost half of that 500,000 ton of capacity has been already added and to a large extent absorbed in the market. There has also been a step change in technology. Our capacities are defined in terms of the width of the line and the speed of the line. Now, prior to, let's say, our investment, the line widths were around 8.7 meters and the speeds were around 550 meters per minute. We were the first ones to invest in 10.7 meter line, which is almost 25% wider and around 650 meters per minute fast. So that makes our line to be the first, widest and the fastest line in the world. But this, all the new investments would be in similar line capacities, which would change the cost structure of the industry. Polyplex has been putting in efforts to upgrade and update the older assets that Polyplex has. So what we see, there are only two ways for the two opportunities for the older assets. One, they would be mothballed because they'll no longer be cost competitive in comparison to these new assets. Or one would try and do something different with these assets. And this has been an endeavor of Polyplex for last several years. I can say safely 7 to 8 years. We have been updating our assets to produce specialty films and increase our presence in the value-add segment and niche segments in the industry. So, to summarize, what would be critical is the cost structure and the product penetration for any industry players to be successful in the long run. Polyplex clearly would kind of stand out in this, given our stock, given our cost structure, given our diversification in terms of geographical spread and the product spread, and also our continuous effort towards the environment and sustainability. Now, COVID pandemic has changed the way world looked at things. Till the onslaught of COVID, everyone was talking about globalization. But come COVID, there has been a serious disruption to supply chains. And people realize that it is beneficial to source locally. And we are clearly seeing trends of deglobalization. And this comes to the benefit of Polyplex. Because of our geographical spread, we have followed a strategy to be onshore, nearshore, to be close to our customers through manufacturing or through several rep offices, distribution setups, and on-site sales people. So this is one of the signature strengths of Polyplex, which will come handy in years to come. Now, a natural question to everyone's mind is, what has been the impact of COVID on our industry? Because most of the industries have suffered badly and economies have been battered due to unemployment and also lack of business opportunities for several segments. Our industry fortunately stands out. As you know, we 74 or 75% of our sales is into flexible packaging. People during COVID, people realized the benefit of or importance of food safety, personal hygiene, personal care, and owing to this, during the COVID pandemic, we saw a serious uptick in demand for our products to the extent of 30 to 40% above normal. Now, this definitely will not last for long. And we are seeing trends that the uptick in demand that we saw are receding to the normal levels. But what will be the new what will be the normal level is something to judge in the coming times. We believe that there will be a new normal. The focus and importance of food safety, personal care, and personal hygiene is not going to go away. So we believe there will be either a stable demand or continuously increased demand for the packaging side of our business. However, on the industrial side of the business, the story is a little bit different because our products go into consumer discretionary end products, be it televisions, be it washing machines, be it solar panels, and any such applications, be it construction. So we have seen a serious fall in demand from, let's say, March to May. The demand fell by almost 40 to 50%, but we have seen a solid recovery also coming in, and almost 20-30% recovery has already happened. However, the demand to recover to the normal levels, we believe it will take anywhere between 6 months to a year. So in summary, the Polyplex strategy is threefold. One, we continue to focus on cost competitiveness. Whenever companies make money, they lose focus on cost. But this is not to happen in Polyplex. We continuously remain focused on removing or weeding out all the inefficiencies in our system and to make most of our existing assets. Then the second part of our strategy is to continuously invest into our specialty portfolio. Investing into downstream, investing into side stream. Moreover, we have redefined our positioning in the Southeast Asian market. Polyplex Thailand location, the Thailand location will be the specialty hub for this region, whereas the Polyplex Indonesia facility will be the most cost competitive capacity in the region, driving the low cost strategy of Polyplex. Polyplex Europa remains to be the specialty hub for the group, and Polyplex USA is a mix of specialty and standard films. On sales side, our first and foremost objective is to ensure that all our assets are always running full, and we never stop for want of orders. And the second part of the sales strategy is to keep expanding our customer base, keep expanding our sales for specialty products. So, as I mentioned earlier, care is a very important part of strategy of Polyplex. So, one is cost centricity, second is customer centricity, and third is care. Care for our environment, care for the society, and care for our people. Now, as I said, the perception of plastic industry has changed due to this pandemic, and we believe that a lot of effort, which is already being now seen, will be put into collection, into sorting, into recycling, and reuse of the products. So Polyplex has had a continuous endeavor in having products in our portfolio which serve the society and which also serve the cause of circular economy and sustainability. Just to name a few, Polyplex has a product in its portfolio which is made of post-consumer recyclate. We have a film which has 100% content which is post-consumer recycled, which effectively means that we could produce eventually polyester film which does not require any fossil fuel. And there are then several products in our portfolio which go towards serving this effort or endeavor of Polyplex. In addition, we continue to invest into reducing our energy consumption, reducing our water consumption, and water conservation. Continuing with this initiative, Polyplex, through its subsidiary EcoBlue, decided to invest and expand its capacity to recycle PET bottles which are used for water or other beverages. So we will start with the post-consumer collected bottles, make flakes out of it, make resins which will be used for both food grade and non-food grade application. Our subsidiary EcoBlue is already qualified for food grade, is certified for food grade application. To give all of you an update on the investments, as you know, our thin film greenfield project in Indonesia, which was phase 1 of our Indonesian investment, is already up and running since November. And we have already we are already at around 95% capacity utilization. We continue to ramp up our capacity, but since the time we started, the line has never been shut for want of orders. The phase 2 of our investment in Indonesia was into side stream, as Saki mentioned, BOPP, and this line is expected to start somewhere around August-September 2021, almost the same time. We also, as I mentioned earlier, we are making several investments into expanding our value-add portfolio, the specialty portfolio. In line with that, we are committed to around 40 to 45 million US dollars of investment, both in Thailand and Turkey. So thank you very much for listening to all of us. And here I present to you the guidance for quarter 2. As we mentioned, quarter 1 was an exceptional quarter because due to COVID pandemic, there was a sharp fall in crude prices and sharp fall in our raw materials. Under normal circumstances, with fall in raw materials, we being in a pass-through industry, our prices would have fallen, keeping the margins at similar levels. And all the growth in margins coming from our expansion of product portfolio and our expansion of our specialty skills. However, during the COVID pandemic, as I mentioned, there was a strong demand, and the demand was almost 30 to 40% more than the normal level. So despite the fall in raw material prices, there was no fall in the pricing. We were able to hold on to our pricing, and in some markets also increase our pricing. Owing to that, we had a very strong quarter and a profitability of EBITDA of almost 1.1 billion. We see some decline. We expect some decline in profitability in Q2, but not that much. Thank you very much.
Thank you, Khun Amit. I think we can take on some questions now. A few of the questions have already been answered during the course of the presentation, so I'll skip ahead to the ones that we have not touched upon. One is, why is China's VA down while PTL's VA is up? Amit?
คำถามแรกนะครับก็คือว่ามีบางคำถามนะครับอย่างเช่นคำถามในเรื่องของผลกระทบจากโควิดนะครับทางด้านของผู้บริหารได้มีการตอบไปแล้วนะครับขออนุญาตนะครับรวมทั้งคำถามในเรื่องเกี่ยวข้องกับทางด้านของ EBITDA ด้วยเพราะฉะนั้นขออนุญาตมาถึงคำถามที่ยังไม่ได้ถามนะครับที่ยังไม่ได้รับคำตอบนะครับอย่างเช่นมีคำถามนะครับคำถามแรกเลยก็คือว่าทำไมนะครับทางด้านของมูลค่าเพิ่มของผลิตภัณฑ์นะครับในประเทศจีนลดลงแต่ทางด้านของนะครับมูลค่าเพิ่มของผลิตภัณฑ์ของทางด้านของบริษัทเรานะครับถึงเพิ่มขึ้นครับ
Okay, so one element of the divergence is also exchange rates in different countries that we operate in. But also one has to see that whenever the industry utilizations are higher, the difference between the margins that you have in the specialties versus the standard films is lower. Having said that, we have been expanding our portfolio of specialties, so they have also contributed towards expansion of our margins in the last quarter.
ในไตรมาสที่แล้วนะครับแน่นอนว่าถ้าดูกันนะครับเมื่อไรก็แล้วแต่เมื่อมีอัตราการใช้นะครับของผลิตภัณฑ์ของเราในอุตสาหกรรมนั้นสูงขึ้นจะทำให้ margin นะครับของทางด้านของผลิตภัณฑ์เฉพาะทางของเราเมื่อเปรียบเทียบกับผลิตภัณฑ์ของมาตรฐานนะครับลดลงในไตรมาสที่แล้วนะครับก็ถือว่าเป็นตัวอย่างดีเลยทีเดียวนะครับสำหรับทางด้านของปรากฏการณ์ที่เกิดขึ้นครับ and the next question is that can you tell us the forecast of the sales revenue for the second half of this year, please?
Oh, it's very difficult to forecast the revenue. As we have mentioned, it is dependent on the raw material prices. However, as I mentioned, sales volume is still seeing increase because we are in the process of ramping up our capacities in Indonesia. And also there is an effort to debottleneck our existing assets. So volume for the next quarter would see growth for sure, but revenues will solely depend on how the raw material price movement is.
ทางด้านของนะครับปริมาณของยอดขายนั้นก็จะเพิ่มขึ้นนะครับเนื่องจากทางด้านของกำลังการผลิตนะครับใหม่ที่เรามีนะครับในทางด้านของอินโดนีเซียรวมทั้งในเรื่องของการปรับปรุงการแก้ปัญหาข้อขวดต่างๆนะครับที่เกิดขึ้นกับโรงงานต่างๆที่มีอยู่ในส่วนในภูมิภาคต่างๆนะครับแต่ว่าเรื่องของนะครับรายได้ทั้งหมดนั้นคงจะต้องขึ้นกับทางด้านของราคาของวัตถุดิบนะครับซึ่งนะครับเป็นเรื่องยากมากที่จะมีการประมาณการครับ Thank you. Next question, please.
In the company view, average China VA can be maintained above $0.7 per kg for this year or not?
It's very difficult to say. So there are two parts of the segment. So if we talk about China, as I mentioned, China, there has been no investment into new capacities since 2014. And China demand has been growing at somewhere around 3 to 4% year on year. So the China's standalone demand supply gap has been narrowing year and year, and with no new capacity additions. The value additions within China would definitely hold strong. However, China is also exporting significant quantities into Southeast Asia, which at times we have seen those exports to be on a marginal level. So those prices, given the new capacities which have come up in Southeast Asia, which are slated to come up in rest of the world, we would see some decline in the margins in coming quarters.
ในไตรมาสถัดไปนะครับแน่นอนว่าทางด้านของกำลังการผลิตใหม่นะครับที่มีการเพิ่มขึ้นในทางด้านของภูมิภาคของเรานะครับในภูมิภาคนี้ก็เราจะเห็นนะครับว่าทางด้านของ margin นั้นลดลงนะครับแต่ในส่วนของประเทศจีนนั้นก็ไม่มีการลงทุนนะครับในกำลังการผลิตใหม่มาเป็นเวลายาวนานพอสมควรทางด้านของความต้องการในประเทศจีนนั้นก็เพิ่มขึ้นนะครับประมาณ 3-4% ต่อปีนะครับก็ทำให้ช่องว่างระหว่างอุปสงค์และอุปทานของผลิตภัณฑ์ในประเทศจีนนั้นก็คือช่องว่างนั้นก็แคบลงเรื่อยๆนะครับแต่ทางด้านของ VA ของประเทศจีนนะครับก็ยังคงอยู่ในอัตราที่ค่อนข้างแข็งแกร่งอยู่ดีนะครับแล้วก็ทางด้านของประเทศจีนนะครับก็มีผลิตภัณฑ์ที่มุ่งเน้นในเรื่องของการส่งออกนะครับก็เป็นจำนวนมากทีเดียว Thank you. That seems to be all the questions that we have at the moment.
So thank you all for participating and joining us for this brief on our quarter.
ขอบคุณมากนะครับทุกท่านนะครับที่เข้ามาร่วมนะครับรับฟังในเรื่องของการนำเสนอของเรานะครับในช่วงไตรมาสแรกนะครับผลประกอบการของไตรมาสแรกของปีนี้นะครับ there's one more question please.
Have you started to pass on the benefit of raw material price decline to customers? If yes, when did that happen?
Okay, so the price decline of the raw material, so the raw materials have been holding at the current levels for now almost 5-6 months. However, given the new capacity additions, there have been some price decline, but very minimal as of now. But we will definitely see further decline in prices and margins, as I mentioned, in subsequent quarters. But because there is always some disruption when a new capacity starts up. But as the capacity is absorbed in the market, we see the margins stabilizing.
ในส่วนของ
I think we can go on to the next question. If the operation in Indonesia is fully operational, what will be the EBITDA proportion from specialty segment for the whole company? As specialty segment already has dropped from 40 to 28%.
Okay, that's a good question actually, and that's right on spot because if you see though our specialty volumes are increased, but the share has gone down. That's because the Indonesia facility is focusing on the standard film segments. So whatever we see at 27 or 28% in the slide, we expect it to be almost at the same level because Indonesia capacity is almost ramped up. We have only last 4 or 5% of capacity ramp up left. But at the same time, all the new investments that we made over last 2-3 years will the revenue and also the volumes will kick in from this year or next year. Similarly, the investments which we have committed around $40 to $45 million, the revenues and the margins from these investments will start kicking in from around a year or 2 years from now.
ในส่วนของนะครับคำถามในข้อนี้ก็แบ่งออกเป็น2ส่วนด้วยกันนะครับคำถามแรกก็คือว่าเราได้เริ่มต้นนะครับที่จะเห็นประโยชน์นะครับที่ในเรื่องของการที่ราคาที่ลดลงของทางด้านของวัตถุดิบนั้นไปยังทางด้านของลูกค้าหรือยังนะครับและก็ถ้าเห็นแล้วจะเกิดขึ้นเมื่อไหร่ก็คำตอบนะครับเมื่อไรก็แล้วแต่ที่เรามีการเพิ่มกำลังการผลิตเข้าไปนะครับทางด้านของราคาของทางด้านของผลิตภัณฑ์ของเราก็จะลดลงนะครับเมื่อราคาของผลิตภัณฑ์ของเราลดลงแน่นอนก็จะทำให้ margin นะครับลดลงด้วยเพราะฉะนั้นปรากฏการณ์ที่เกิดขึ้นนี้นะครับเราจะเห็นในไตรมาสถัดไปครับและในส่วนที่2ของคำถามนะครับถ้าการดำเนินการในอินโดนีเซียนั้นมีนะครับการดำเนินการอย่างเต็มขีดความสามารถ 100% แล้วนะครับสัดส่วนของ EBITDA ของทางด้านของผลิตภัณฑ์เฉพาะทางนะครับกับบริษัทของเรานั้นจะเป็นอย่างไรนะครับในเมื่อสัดส่วนนะครับอย่างเช่นสัดส่วนของผลิตภัณฑ์เฉพาะทางนะครับจะลดลงนะครับจากทางด้านของ40กลายเป็น 28% หรือไม่นะครับคำถามนี้นะครับเมื่อแน่นอนนะครับเมื่อเรามีการ เพิ่มนะครับสัดส่วนของทางด้านของการผลิตทางด้านของผลิตภัณฑ์เฉพาะทางนะครับในส่วนของปริมาณนั้นเพิ่มขึ้นนะครับถ้าเรามีปริมาณที่เพิ่มขึ้นแน่นอนนะครับทางด้านของสัดส่วนนั้นก็จะลดลงนะครับที่ผ่านมาก็การลงทุนนะครับก็คือประมาณ40 ล้านเหรียญแน่นอนเราจะเห็นผลนะครับในเรื่องเกี่ยวข้องกับทางด้านของ EBITDA นะครับแล้วก็ Margin ในช่วงนะครับในช่วงอนาคตอันใกล้นี้ครับขอบคุณครับ
However, whatever investments we had committed to in past but are yet to start, and the investments that we are committing for next 1 or 2 years in terms of specialty, this would add around 2,000 to 2,500 tons of specialty films per month.
ในการนะครับลงทุนที่เรามีนะครับมีพันธสัญญาเรียบร้อยแล้วในช่วง1 ปีถึง1 ปีครึ่งข้างหน้านะครับจะเป็นการที่จะเพิ่มกำลังการผลิตในส่วนของนะครับผลิตภัณฑ์แผ่นฟิล์มเฉพาะทางของเรานะครับได้ถึงประมาณ 2,000 ถึง 2,500 ตันต่อเดือนครับThat is all the questions that we have addressed already. Thank you.
Thank you very much ขอบคุณมากครับ
ขอบคุณมากครับ
Thank you.
Thank you.